Hey guys, welcome back to the channel. In this video, I'm going to go over how much distribution income I got from high yield ETFs and go over some market news and what I'm doing to prepare for 2026. As always, don't forget to smash that like button and share this video if you like this type of content so the algorithm gods know that I'm here. Hit subscribe if you're new so you're alerted every time I publish a new video about stocks, investing, finance, and news. But before I get started, just a quick disclaimer, none of this is financial advice and you should always consult a licensed professional. With that out of the way, guys, let's get into the video. All right, so we're going to hop over to the portfolio. So this is my live portfolio, no screenshots here. As you guys can see for the month, it has been absolutely rocky and volatile, right? This is just for the month. We had some really huge dips. I'm sure you guys have felt it. This week, absolutely crazy, right? This portfolio dropped a lot, almost 9% in value, right? This was just a crazy week, but we ended the week on a good note. We ended in the green. All right. So I will definitely take that just for the day. I am up close to about, 5%. So I will take that. And then for the week, I am up 3.3%. So we have a little bit more ways of a recovery to go. But I did do a lot of dip buying. So hopefully as we recover, those opportunities that I took advantage of will start to play out. All right. So in today's video, we're going to be going over the high yield ETFs. We're going to be going over PLTW, NVDW, HOOW, WPAY, and MSTW. Okay. Real quick, in case you don't know, we have earnings coming up, okay? Earnings for next week. And you have a lot of the hyperscalers, a lot of the big tech companies, AI companies that are going to be reporting earnings, right? This is going to give us a really good sign of where, the AI trend is going, where the trend with data centers are going. So, you'll definitely want to keep an eye out for earnings from Meta, Microsoft, definitely for sure. And I believe Google does not report this time, if I'm not mistaken. I don't believe Google's in here, yes, they are. Alphabet, duh. So Alphabet, you'll want to listen to them. You'll want to listen to Apple, definitely Amazon. And then I believe the following week, or next month, we'll have, the Palantir report and as well as NVIDIA. So this will be a very important week, not just because of earnings, but we also have the Federal Reserve. Okay, the Federal Reserve will also be speaking next week. And right now, the CME Group, the Fed Watch tool, they are pricing in a 98.3% chance that we're going to get a rate cut of a quarter. All right. So again, this is going to be one heck of a week. This will be very choppy, I think, very volatile. But if everything goes in our favor, if everything, if earnings are good and all these companies are smashing earnings, I could see that the stock market will continue to climb higher. Of course, that's not financial advice. All right, let's hop into the ETFs. You guys know I like to use Snowball Analytics. It gives you guys all of the data, fully transparent, so you guys can pick apart or pause the video anytime so you guys can see my actual metrics, okay? Like what I'm actually making from these ETFs, because I get a lot of questions. Hey, is there NAV erosion? How many shares do you have? How much did you put in, etc.? So this dashboard gives you all of that information fully transparently, okay? Let's get into it. So first one up is WPAY from Roundhill. All right, so as you guys can see, WPAY has been outpacing the S&P 500. Of course it has. It is a leveraged product. It holds the Mag 7 on top of, a couple other companies in there, things like Broadcom, MSTW, or Robinhood, etc. So again, I'm a big fan of WPAY. So here are my metrics. Currently, I'm still down a little bit. I'm down 10 basis points, $87. But, look at the dividends received so far. I think as time goes on, I will, these dividends will start to compound. And then not only that, this ETF will recover if we, go on a nice little bull run, all right, from these lows. As the market continues to push higher, as those underliers continue to push higher, this ETF will benefit from this. So I'm currently down 2.7%, but again, with the dividends received, it kind of offset those paper losses. I have 1,734 shares of this ETF. All right, scrolling down for the week. All right, for the week, I received 1,272 in dividend distributions. So I will take that. And of course, I'm going to add all this up on a very high speed notepad for you guys. So stick around. All right. Now we have Palantir, the Palantir Weekly Pay ETF from Roundhill. We can take a look. As you guys can see, PLTW has just been smashing the S&P 500. Of course it has. The S&P 500 just cannot stand up to Palantir. Palantir's just been going on an absolute tear. It's been securing contracts. It's been having great earnings. I cannot wait for their earnings to come out next month. All right, so scrolling down to our metrics, I have 1,211 shares of this ETF. And as you guys can see, my capital gain right now is 15.3%. Even after, we had those pullbacks, we saw a little bit of recovery on Friday. But when you factor in the dividend return, I am up 26.4%. So I will take that. All right, for the income, on October 21st, I received 1,223 in dividend distribution from this ETF, so I will take that. And then moving on, of course, we have the NVIDIA Roundhill Weekly Pay ETF. And then scrolling down, we see NVIDIA has been just absolutely beating the S&P 500. I mean, you can't have AI without NVIDIA. And NVIDIA has been doing a lot of things in the background. They have a couple partnerships that are noteworthy. One, they have a new partnership with Uber. I think that is really bullish, not only just for Uber, but bullish for NVIDIA and the demand for NVIDIA chips. Not only that, Jensen Huang went to meet up with Elon Musk recently and then handed him a new AI server. The thing was the size of a shoebox, and it was vastly smaller than what he handed him, years prior. So, AI, the technology is getting smaller, it's getting more powerful. So again, I'm very bullish on NVIDIA. They're going to power the way for artificial intelligence. All right, scrolling down. I actually did add to this position over the week, through the dips. So right now I am sitting on 1,151 shares of this ETF. You guys can see for my capital gain, even though we were having, all those pullbacks, you have the volatility drag, you have the volatility decay because these are leveraged, products. They have 120% exposure to the underlier. So, you're going to get that. You're going to get where it's not a 1-for-1, even though NVIDIA is at all-time highs, and this capital gain should reflect that. Again, it resets weekly. So that volatility drag, is compounding over time. So this is something I think a lot of people are not aware of, and they get all starry-eyed about, uncapped gains. Well, it's uncapped gains, sort of. All right. So I really think people should be aware of that. All right. And not just YOLO their money into these ETFs. Anyways, total profit, you guys can see I'm up 35.8%. Again, the dividend distributions do help offset some of those losses, but I don't have losses for this ETF. So if anything, it's just contributing to the total return. Scrolling down, 10/21, October 21st, I received 755 in dividend distributions. So that was really, really cool. Next, we have the Roundhill HOOW Weekly Pay ETF from Roundhill. And again, Robinhood had a really nice pullback. If anyone got in on this dip, congratulations. Robinhood is one of those more bigger beta names. They've had such a stellar year. Like they are up so much. There is no reason not to be bullish on Robinhood. Of course, not financial advice. I just think that they have so many tailwinds going for it. Not only crypto related, but fintech related as well. Anyways, congratulations to anyone who did get into HOOW or buy any additional HOOD shares. So scrolling down, I still only have 567 shares of this ETF. Again, I don't want to add to this ETF. I know it's a great company and everything else, but I just don't want to add to this ETF. I think it's expensive, and I already have a sizable position in this. But if we look at the metrics at the returns here, you guys can see I am up 10.1%. This week, I was actually down in the red, but on Friday, this fully recovered. It had a really, really good rip these last 2 days, so that was really nice. WPAY is obviously going to benefit from something like this. But with the dividends factored in, I'm actually up 30% on a total return perspective. Okay, scrolling down for the week, HOOW gave me 844. All right, MSTW, the redheaded stepchild. All right, we have MSTW, which is the Roundhill MSTR Weekly Pay ETF from Roundhill. As we scroll down, you guys can see not doing so hot, right? Not doing so hot. I did pick up some additional shares throughout the dips, throughout the week. All right, I still think, and I am still bullish on Bitcoin. And because I'm bullish on Bitcoin, I am bullish on MSTR. All right, and by extension, this MSTR linked ETF. So I'm still very bullish on MSTR in general. All right, I have currently 1,642 shares of this ETF. I am currently down 30%. All right, that is enough to scare anyone out of these ETFs or high yield ETFs or stocks or whatever. So I totally understand it. I totally get it, right? With the dividends received, I'm actually still down, but I'm down less. I'm down 18.9%. All right, when you factor in the dividends to offset those capital or paper losses, right? So this is why I like these ETFs, because even though there's downward pressure on these ETFs, as we saw throughout the last 2 weeks, they are still able to produce a dividend. So you can wait to collect a dividend while this thing recovers. Another reason why I really do like, the Roundhill Weekly Pay lineup. All right. Scrolling down for this week. All right. You guys can see not that big of a distribution. All right. Obviously for the last 2 weeks, we've just been down. So for 10/21, I got 561 in dividend distributions from MSTW. All right. So that'll do it for all of the ETFs that have paid me out. Let's look at this very high speed premium notepad. All right. So for week number 4, I have received 4,657 in dividend distributions. So not too bad. I will definitely take that. I hope to end this month off strong. All right. All right. Let's move on, guys, into the market news, because there's been some very exciting things going on. And I just want to share a thesis with you guys and get your guys' thought on it. All right. First off, we had Roundhill release 4 new ETFs, one for ARM Holdings, one for Alibaba, one for Costco, and one for Uber. All right. So these single ticker ETFs will be added to WPAY at some point in the future during when they do their next rebalancing, which I believe should be coming up very soon. So again, this is another reason why I'm a big fan of WPAY, is because as they continue to add new tickers, these will just be added to WPAY. Now, there is a double-edged sword here that I think some people are not considering, all right? Even though it is equal weighted, which I believe is a good thing for WPAY and WPAY holders, you are going to, I think, probably experience, and maybe I can expand on this in another video, but you will experience at some point, some type of drag on the performance, because if they have, ETFs added that are not fast growers, not momentum stocks, things like Robinhood or things like a AVGO or things like, I don't know, anything else in there, maybe a Tesla or non-Mag 7 ETF. I think there will be at some point a performance drag, right? It's just something I'm keeping at the top of my mind, something I just want to be aware of when I'm looking at WPAY and how I'm factoring it into the portfolio as a whole. Okay, so that was really cool. Good thing that they came out with these ones. So if anyone's interested, they can check these out. We also had some other big news from Roundhill. Again, Roundhill is just killing it. They are the only ones, in my opinion, that have the ETFs that fit the bill for upside and income. So right now, they will be releasing next week GLDW and GDXW. All right, the Roundhill Gold Weekly Pay ETF, as well as the Roundhill Gold Miners Weekly Pay ETF. All right, so you'll have gold exposure, which is something that is super, super important right now. So I have honestly been looking at my portfolio, like I've explained in my last couple of videos, and I need to kind of move away from investing in only high yield ETFs. All right, mostly the high beta names, things like BMNR, things like MSTW, things like Robinhood, or even Palantir. Right, I need to move away from those and start looking at more stable, slower growers, things that won't crash 10, 15, or 20%. Like we've experienced these last 2 weeks, right, where there's a huge sell-off. So I've been looking at this, really trying to figure this all out for myself. I actually posted something in the community, in my Discord community. If you guys want to join, I'll put links in the description, etc. But anyways, this is what it was, right? I just put a chart. This chart is RSP, which is an equal weighted S&P 500. And then I had SPY, which is, your vanilla S&P 500. And then the red line here, that is gold. That was ticker GLD, right? So I basically said, what's interesting to note is that from February 18th to Liberation Day, first week of April, gold barely flinched. All right, now I'm sure we're all fans of gold now, but with GLDW coming out, could that be a defensive ETF with income potential and your hedge against the dollar in equities like tech stocks? All right, I may consider a position in GLDW once the margin maintenance ratio comes down. This would be an absolute crutch, in my opinion, for WPAY. All right, since I'm fully margined, and if we see a 30% correction in the market, assuming gold has a softer pullback, gold could help keep the boat steady with something like an SGov position for a margined account while still being able to provide some additional income. Anyone poke any holes in this, thesis, feel free to tear this apart. And I also added my thesis behind gold exposure at this time is the same for Bitcoin. All right, interest rates are coming down. The United States debt just reached $38 trillion. That is absolutely crazy, and it's going to continue going higher. All right, the M2 money supply is going to increase. You have dollar devaluation that will happen. This is going to send Bitcoin and gold up, in my opinion, of course. All right. I think as more money floods the market, more people get a hold of cheaper dollars, they're going to invest in Bitcoin, they're going to invest in securities, and they're definitely going to be worried about the devaluation of the US dollar, so they will flock to gold. Right. And I also put a note in there that the U.S. credit rating will not improve at this time or in the next few years. Moody's, S&P Global, and Fitch will not upgrade the U.S. credit rating. Definitely, I don't think, while we have this current president. All right. And maybe not even for the next president, not to make this political, but I'm just saying that I don't see, at least in the next 4 to 6 years, a credit rating upgrade for the United States, right, which could be bearish. Okay. So keeping that in mind, I saw an interesting video, and this added more kind of like fuel to this thesis. All right. So we're going to listen to We're going to listen to Mark L. Newton, who's the head of technical strategy at Fundstrat. You guys know who Fundstrat is, all right? Fundstrat is headed by Tom Lee. We all know who Tom Lee is. So I found this very interesting. I listened to Mark Newton. I follow him on X. So when he says something, when he does an interview, I am listening. So let's listen in on this.
Price about Tom always, or mostly every time, calling very calm where the market is going to go. Yeah. What is your vision for actually next year? We don't want to enter into that yet, but the markets are priced in 2026. And I know Tom seems to be a little bit cautious. I don't know if you're saying sensation about what might happen in 2026. At least, what are you seeing right now in your dashboard? Because everything might change in the last couple of weeks of the month of the year.
I won't give away all my secrets of 2026. And there still is a couple months that are very important before we truly make that call. I will say that next year is a midterm election year, and historically that's been the worst of all 4 years of the cycle. The market's also been up 20%, 20%, we're up 13%. If we finish this year on a high note, 3 years of 20% heading into next year, I think the market's overdue for probably a 15 to potentially 20% correction, but I don't sense that it's going to be a bear market that leads to a recession. I think it'll be a temporary pullback that likely lasts the first 6 months of next year, and then we're going to have a rally and things will be fine. Now that's my...
There you go. If we have a huge drawdown, 6 months worth of a drawdown, are you really going to want to be in these high yield ETFs, the PLTWs, the NVDWs, the HOWs, the WPAYs, right? All those, silly people getting in all in on WPAY. Are you really going to want to be in these leveraged ETFs? Okay, I think you guys already know the answer to that. So now you have to kind of think outside of the box. If we were to hit a bear market, what is going to be the next move, right? What is going to be the next move? These last couple of weeks during this drawdown, during this choppy market, really was eye-opening. So I definitely want to try and get ahead of what's to come in the future. It's probably, 50 to 60% probability that we do have, some type of prolonged, just downward pressure on the market. So what will you do? How will you act? What asset class are you going to be looking at? So these are the questions that I'm asking myself. I'm constantly looking at my portfolio. I hope some of you guys take this as a warning, take this as some foresight. If you're all in on these high yield, leveraged ETFs, you probably want to reconsider going into 2026. All right. At least I am. I'm looking to optimize this portfolio. Maybe I may sell out of some stuff. I may not sell out of stuff. I haven't quite decided what I want to do yet. All right. So anyways, hope this was all educational for you guys. Hope you enjoyed the video. Hope it gave you guys some insight. I got nothing else for you guys. Enjoy your weekend. Go out, touch some grass, have a barbecue, have a beer, go have dinner with your folks, your family, your kids, your cousins, whoever, right? Just go have fun. Stay out of finance tube. And I will see you guys next week. Take care.